More on the strikes now. Kate Moody's here with the business. And Kate, you're going to tell us a bit about the financial cost of all this industrial action.
Absolutely, because the longer the movement continues, of course, the more widespread the financial effect. The Bank of France has said that the almost total halt in transport in the month of December shaved 0.1% off of the country's GDP growth. That's given that expansion for 2019 as a whole is estimated at 1.3%. The central bank said 10% of all businesses across the country had been impacted as well. Hotels, restaurants, and retailers the hardest hit. Now, the negative effects are more concentrated in the Paris region, where public transport remains limited. Shops said that their holiday takings were as much as 50% lower than normal in December. Fnac Darty, the group that sells consumer electronics and household appliances, says it lost 70 million euros in December because of the strikes, while freight operators are losing as much as €1 million every day. Well, a day after the U.S. and China signed their long-awaited trade truce, the U.S. Senate has overwhelmingly approved another major trade deal. Senators voted 89-10 in favor of the U.S.-Mexico-Canada Agreement, or USMCA, which was negotiated to replace NAFTA. President Donald Trump is expected to sign the bill into law quickly. The agreement addresses issues like labor costs, but critics say it falls short on dealing with climate change. The International Trade Commission projected in April that the agreement would boost the economy by $68 billion and add 176,000 jobs 6 years after taking effect.
The United States-Mexico-Canada agreement is a major achievement for President Trump and a very big bipartisan win for the American people.
Well, the European Union's trade chief says the bloc will be reading the fine print of that Phase 1 trade deal, which was struck by Washington and Beijing, to make sure it's compliant with global rules. Trade Commissioner Phil Hogan said that some details remain unclear. He's in Washington for talks about another brewing trade spat. Washington has threatened to impose tariffs on €2.4 billion worth of French imports if Paris doesn't roll back a tax on tech companies. Separately, Germany confirmed reports that the U.S. is also threatening to target European cars with tariffs if EU governments continue to back the Iran nuclear deal. Analysts say it's a reminder that the Trump administration is still ready to use tariffs and trade ties as leverage in a number of international disputes. Well, global markets have welcomed that trade deal between the U.S. and China. Wall Street's soaring to new highs once again. The Dow Jones adding about 150 points, firmly above that 29,000 mark. The S&P 500 has broken above 3,300 for the first time. Shares of Morgan Stanley are up 8% as the investment bank beat expectations with its fourth quarter earnings. We saw a bit more caution on the major European indices, just the CAC 40 finishing slightly higher there. The London FTSE 100 down about 0.4%. Germany has said it will phase out coal power in the next 18 years. The government has agreed to pay out compensation to companies and regions that will be the most affected. Environmental activists have urged for an even faster transition, as Sam Bradpiece reports.
Once the heartlands of German industry, the country's coal regions have fallen on hard times as Europe's biggest economy moved away from heavy industry and towards renewables. Now the government is pushing to eliminate coal-fired power plants by 2038, if not sooner.
We're the first country that's getting rid of nuclear and coal power on a binding basis. This sends an important international message.
So how is the German government shutting down these operations, particularly in the less prosperous east where lignite or brown coal mining is a much-needed source of income? The answer is money. The government has struck a €40 billion deal with 4 regions to compensate for economic losses. On top of this, heavily polluting coal-fired power plants in western Germany will receive €2.6 billion for an early shutdown, while €1.75 billion would go to plants in the east. Brown coal generates about 19% of the country's electricity, but is considered the most polluting type of coal, partly because its low energy density means greater quantities must be burnt. With coal and nuclear on the way out, Germany must make up the shortfall with increased natural gas and renewable production. Environmental campaigners are worried that in the midst of a climate breakdown, 2038 is too late to stop burning coal, noting that a new plant is due to be built this year.
That's all the business for now, Laura. I'll be back in the next hour.
Kate, thank you very much indeed. Let's get some sports for you now. Selena Sykes